Hello, welcome to Success and More Interesting Stuff, brought to you by Livewire Markets. I'm Matthew Kidman. Sometimes misfortune can lead to opportunity. Wes Maas was an aspiring young rugby league player trying to establish himself in the NRL. The kid from Dubbo had boundless energy and in his spare time worked in an equipment hire business. A football injury not only meant he was out of action on the field, but it also took him out of the hire yard and into head office. It was here that his world opened up. The family-run business was successful. It concentrated heavily on return on total assets. Maas was quick to latch on. It wasn't long before he threw in his NRL dream and headed back to Dubbo for a fresh start. Still in his early 20s, Maas spent his savings on a bobcat and borrowed twice that amount to buy a tipper. Suddenly, he was running his own business. Never happy to rest on his laurels, Maas expanded his fleet of equipment. He was keen to diversify and soon started an equipment hire business, leaning on his knowledge from his time in Sydney. While Dubbo seems to be a remote place to build an empire, Maas saw its potential. He was able to buy a quarry under the nose of international giant Holcim, and then his world expanded. Property development and civil works followed. In 2020, Maas looked to float on the share market. The capital raise could do wonders. Maas Group listed and started to expand. Today, he runs a $1.5 billion business and has amassed a personal fortune in the hundreds of millions of dollars. The group has assets throughout regional New South Wales, Victoria and Queensland, with Dubbo right in the middle. Still only in his 40s, the journey has a long way to go. Welcome, Wes. Veteran rugby league journalist Steve Mascord, an old colleague of mine, described you once as a Les Davidson-like player. Is that true?
I don't know about that. Maybe I was quite tall and fairly lean, but yeah, I wouldn't put me in the same category as Les Davidson.
Well, for the listeners, we should kind of fill it in because some of them won't have followed the NRL over the years, rugby league. Les was a rangy forward and a bit of an enforcer, a bit of a hard man. You didn't mess with Les on the field, or otherwise he'd sort you out quite quickly. Personality-wise, something similar?
Yeah, maybe I probably didn't mind the rough stuff, but yeah, definitely not in the Les Davidson category.
So what position did you play?
Back row or front row, yeah.
Oh, okay.
In the forwards.
Yeah, and that was a tough gig?
Yeah, it was a tough gig. Plenty of fun and plenty of learnings. It was a great time of my life and a great experience.
Yeah, and obviously tough physically. And I mentioned in the intro there that there was an injury that you had. You'd come down from Dubbo to Sydney and moving away from home, but then trying to break in as a first grader, get injured. That was tough to deal with?
Yeah, extremely tough mentally, just as much as physically. So I started my rugby league journey as a 15-year-old, played for New South Wales and signed for Parramatta. And I was with Parramatta for 5 years, but didn't move down until I was 17 and played as an 18 and 19-year-old with Parramatta. And we had a great group. We actually we lost an under-19 grand final in the first year, and the second year I played reserve grade as a 19-year-old and had plenty of success, and we won the grand final that year. So Daniel Anderson was the coach at that time, and the year before I had Shane Flanagan as a coach, so I had great leaders.
Good pedigree.
In the system, Brian Smith was the club coach or first grade coach, and I think that was I had great mentors there from coaching.
And what kind of systems. lessons did you learn?
About the
from those. They've gone on to great careers. Brian Smith was a long time league coach, made a lot of grand finals, unfortunately not a premiership. But Shane Flanagan did go on with Cronulla to win a premiership and still coaches today.
Yeah, I think the biggest learning was culture and stick to the fundamentals. If you get the fundamentals right, the 1%ers really, really matter at the end of the year. And then if you couple that with culture, that's where you can really get that discretionary effort and success of grand finals. So I think obviously Shane Flanagan had success there with Cronulla. He's been successful all the way through, same as Daniel Anderson. Brian Smith, I'm not sure why he didn't get the first grade success, but unbelievable person with his knowledge of football and the systems that he built. And plenty of good coaches have come out of underneath Brian Smith.
Definitely. So you went on and then you also had this part-time. Was it a part-time job or a full-time job? Because back then it would have been moving into full-time football, I would have thought, if you were going to make it.
Yeah, I went from Parramatta from a 19-year-old to 20 years old at West Tigers, and that was a start-up club. So, in hindsight, maybe not the right decision because I was comfortable with my group and the surroundings at Parramatta, and it was a great system. To go from there to West Tigers as a start-up was a challenge because the system wasn't great at that point in time. And unfortunately, after 6 weeks of being at the Tigers, I had a major shoulder injury, which I had a shoulder reconstruction and was out for 18 months.
18 months.
Yeah,
it's a big hole in a what possibly could have been a 10 or 12-year career.
Yeah, it was a huge hole. I think a bigger hole mentally. So I can remember having the operation, and when I woke up, the very first thing I said to the doctor was, "Can I play first grade?" And he said, "Don't worry about first grade. Worry about your shoulder." That I remember the only thing that mattered was to be able to play first grade. And I say everything happens for a reason, and probably one of the successes or opportunities that created was I had a job at Shawco Hire, which was owned by the Geelan family, and I went from a yardie to a truck driver, and when I became injured I moved in the office and learned all about the hire game and return on capital.
And why did you have that job if you're concentrating on your football career?
I think I was always hungry, so I didn't want to. I was full-time footballer, so full-time training, but the minute I finished footy training I didn't go home, I went straight to work, and I think that was just instilled in me to make sure I was working all the way through. And
that family was happy with those flexible hours? They obviously liked you.
Yeah, I actually didn't have too much to do with the family. I had another great boss there, a bloke called John Lewis, who stayed with Coates, all the way till today.
Shawco went into Coates, did it?
Shawco merged with Sykes and became Shawco Sykes, and then Coates Hire bought out Shawco Sykes. And I had a great boss, and he was very flexible, and I think it was a bit of give and take. And I think I took that skill away or took that into our business today, and we are flexible as well. So we have give and take, and we expect the job to be done. It doesn't matter when you get it done, as long as you get it done.
And you moved into the head office, as you said, or the office, and you learned a whole different skill base. Now, most people these days, if they're going to work in head office, do some kind of formal degree. You come out of the yard, and you've had to pick that up quite quickly. What did they get you to do in terms of administrative and management work?
I learned all parts of the office. So I started in there as the junior or the apprentice. So I learned about credit applications, about hire control, controlling the trucks, and then most importantly was the return on total asset, which we measured every single day. So that was a great system and a great discipline that they had in that business. And something that I took home and when I started the business and right through to today.
And did a light go on? Did you say, geez, I'm enjoying this? I never realised there was something out there that was as intriguing as this?
We had a great time at that business, and I think that came from the leader or my boss at that time. He created a real game environment. So I took that sort of sporting mentality, or he took that sporting mentality into that business, and everything was a game. It was like winning or losing, and we used to compete with other branches, etc. So again, I probably took that back into our business and relate all parts of our business to some sort of sporting analogy about you're winning or you're losing, you're growing or you're dying, etc.
So you just described it as fun. What's the fun bit?
Success. Yeah, so however you define success, I think that's fun, and if you're doing it with good people, it's even more fun.
And how long were you in that office? Because eventually you head back to Dubbo. Well, you were there for...
I spent 2.5 years with Shawco Sykes, which became Coates, yeah.
Okay. And so what gets you to pack up and move back to Dubbo, the old hometown?
So in my second year at the Tigers, I came back at the end of that year, and I was probably quite frustrated with that with how I was going and the club environment. Then I went to Souths in 2002, which was the comeback year. Again, a new club, and a similar stage in their build-up to West Tigers, where they were a start-up. They had pretty disjointed or thrown together management at the time, and I had varying success. I played a few games of first grade there, but had moved on in my head and had worked out that I probably wasn't going to be in that top 20% of rugby league players who could make a real good earning, and I worked out that I probably should move home and start building something.
So quite analytical in your assessment.
Yeah, I think I was. Still very passionate about the game and love the game, but probably just worked out that I wasn't going to be in that top 20%.
Yeah. So you go back to Dubbo. Your family's established there. I know a couple of your brothers were established tradies and were on their way. You come back with a little bit of money. You buy a Bobcat. Is that correct? And you borrow some money?
Yeah, that's correct. I moved home. I've got one brother who was a carpenter or a builder, and one was a plumber. Both had their trades, and they're both younger than me, so they used to call me Neville No-Trade. And I had $14,000 in savings, and I bought a Bobcat and borrowed 25 and bought our first tip truck.
So 14,000, is that a second-hand Bobcat, is it?
Yeah, second-hand Bobcat, that's right.
And so when you sat down and bought that equipment, used your own money, and then went and borrowed the other money, so we'll get to that in a second, and the relationship with the lenders, did you do those equations that you'd learned at Shawco, or was it just, let's just get started?
I'd like to say I did those equations, but I think it was just let's get started. And I had a real hunger or fear for failure that it was never going to fail. I was always going to work from daylight till dark and make sure it worked.
And do you remember your first job?
Yes, yeah. I actually had no idea how to operate a Bobcat, so I went to a neighbour. We used to live 10 kilometres from town on a 25-acre block, and I went to the next door neighbour's place out there and taught myself how to drive for 2 weeks, and then went to my first job, which was in Tamworth Street at a mate of mine's place, and I think I bumped the side of his house more times than I should have.
He gave you a go.
He gave me a go. Yeah.
So a bit of friendly fire from you.
That's it. Yes.
And so you use the Bobcat. You do that job. You're still learning on the job. How do you grow a business when you're operating, but you've got to sell as well? You've got to find new clients.
I think I grew by reputation and getting the job done, and I would do whatever the client asked. I would do so. I think that was how the business grew, off the back of the work that I did and the acceptance of the client.
And did you have to discount to get work because you were new in town?
I did initially. I would say now, if I look back, I was definitely value for money. Even if it was slower, I was cheap enough that it didn't matter.
And you went and borrowed money, so you're paying off interest. You got a tipper. What's happening there? Are you driving that as well, or have you got someone else into the business by this stage?
No, the first it took me 8 weeks to have more than 50 or 60 hours a week for one machine, and 8 weeks later I bought a second Bobcat. And
with borrowed money again? With
borrowed money, yeah. And I continued to work on the tools as such, probably for the first 2.5 years, continuously.
Just by yourself, or was there someone helping you?
I had a second employee after 8 weeks. Yeah.
At that 8 week mark?
Yeah.
Okay, so you must have lined up a fair bit of work. The word of mouth must have been pretty strong around Dubbo.
Yeah, I had a good base of trades or people that I could lean on or push into. But obviously I was working hard and I was the right price.
And you mentioned that you were working for a friend initially, that first job. That was in town. What type of jobs were you doing?
The initial part for the first 12 to 24 months was just hourly hire for yard cleanups, yard levels, and the like. And
you went to the bank. Did you know someone? Was it the old days where you went and saw the bank manager and you secured it against, what, the piece of equipment?
Yeah, that's right. I had an introduction to a bloke called Mark Knox at the Commonwealth Bank in Dubbo. And Mark was my banker for the next 10 years, and I definitely tested him out, tested his approval limits, and we had a great relationship. I think everything that I told him that I would do, I did. So the bank, I built a lot of trust in the Commonwealth Bank in Dubbo.
So they really became a partner with you?
For sure, yeah, and that was the way I've always viewed the bank as a partner rather than a supplier. It was like a partnership arrangement.
And do you remember what kind of rates you were paying on your machinery?
I think at that point I was 8 or 9%. I think the highest interest I've probably paid is just over 10.
So in those days, you talked about just get started, but was there a point where you thought there's a business here and you started to dream a bit about what it could look like?
At about the 2.5 year mark, I'd probably worked myself nearly into the ground.
So you're about 26 at this stage?
About 24 and a half, 25. So right. I started in 2002, so I was about 22 then. I actually caught up with a friend who, from the local footy club, and he was a financial advisor, and I said I need some guidance about what I'm doing. I said I'm working myself into the ground. I've got no idea where this can go. And he said, well, what do you want? And I said, I want to build a sustainable long-term business, and I want to have build up some base earnings. And he came back to me and said, right, well, how much do you want? And I said, I don't know, 150 grand a year or something, that'll do. And he said, but you can do that next year. And I said, how do I do that? and he said to me, well, I said to him, how much do you want? And he said, I want $1 million a year. And I said, oh, right. Well, I said, if you can do it, I can do it. And then we started. I built a business plan and how I would get to that. And in the old days, maybe not today, but I always had this thing locked in my head that you could get 10%. On your asset. So I said, right, we're going to go from where we are today to a $10 million asset base, at a worst case a 10% passive earnings, and we set out a business plan that we would do that in the next 5 or 6 years, and we sort of nailed that in the next 4 years. So that's sort of where the strategy or the business planning started was after the first 2.5 years.
So I'm a little bit lost there, because you start talking to this guy at the football and you say you're working yourself into the ground and you walk away with a business plan that grows the business substantially. So what was working yourself into the ground? What kind of hours were you doing?
I would be doing 60 to 70 hours a week, I'd say, maybe and some. Like definitely from daylight till dark, and then get home and do the bookwork after that. And probably what I had was I wasn't clear in my head, so you had no satisfaction because I didn't have a written plan. I didn't have a goal, and the real light bulb moment was actually to have a defined plan and break it down into small actions that you could tick off. So I think from that point forward, we've always had a 1, 2, 3, 5 year plan, and we always back solve to where we want to get to. We've always got a vision of where we want to get to, and that's probably one of my strongest points is I can sort of put a vision in my head, and I can believe in the vision, and then I can sell it to our people of this is where we're going and this is how we're going to get there.
Now, it's really interesting you say that, because the first ever Success and More Interesting podcast was with Grant Hackett, the swimmer, who now runs a company, Generation Development. And Grant said exactly the same things. If you're aiming for the 4-year goal, interesting, you said you nailed your plan in 4 years, that original plan. You had to break it down into smaller, achievable targets that you could reach, quite soon. Otherwise, the long-term goal just always seemed to be too far away. So that's something similar to what you're saying?
Yeah, for sure. Yeah, that's exactly. And I mean, it remains consistent today. So we talk about a 1, 2, 3, 5 year plan. The reason for that is the Australian political cycle is 4 years, so generally everything in the 3 or 4 years is funded, and the 5 year is a bit of a vision. So we know what's coming, and we know what's actually funded. So that's why we work in that cycle.
Yep, very good. We'll get back to that funding because you obviously do a lot of civil works that require government support. Just on that though, that burnout phase, you must have also in that original plan thought about taking on more people because you couldn't sustain what you were doing, just doing it all yourself. So how did that come about? How did you take your hands off the day-to-day and start becoming a leader of sorts?
Yeah, look, at that sort of 2.5 year mark, we definitely worked out that the business could only grow and scale so much if I was on the tools. So we brought in, I brought in a few friends or trusted people that we could build the business off. One of them still my right-hand man today, and that bloke's Damien Porter. And then from there, that allows us to double the business really, really quickly with scaling the people capital. And then just along the way, so we defined that we had to have a business plan and break it down into, I talked about the 1, 2, 3, 5 year plan, but we also broke that backwards and went 3, 6, 9 months and then 30, 60, 90 days. And we always assessed it every 30 or 60 to 90 days. And we continued to build from that team. I think in that the first decade, I don't think we lost a single person in the business. So I really looked after our people and we did exactly what we said we were going to do.
It's a good track record. Do you remember when you fulfilled that 5-year plan? You said you did in 4. What the business looked like, how many bits of equipment, how many employees? Does it still stick in your head?
Yeah, so the business definitely, from year 1 to sort of year 5, so to 2007 was when we hit that first milestone. The business had about 40 pieces of equipment, about 40 staff, and we started building small scale civil projects up to sort of $10 million in size, and that sort of was a little bit of a phase in the business where at that point we stretched ourselves in management capability and comfort, taking risks. We've always been pretty risk averse and we like control. And we decided at that point in time we definitely wanted to continue to keep growing, and we had a huge opportunity. So we pivoted from doing civil projects to building a substantial plan hire business. So that was the point where we brought in a next level of people, and we brought a sales manager out of Coates Hire, a bloke named Evan Smoltz. Mm-hmm. And he was our door opener, and then we went on a journey for the next 5 years, and we went from 40 machines to 400.
And who were the likes who were hiring the equipment off you? Was it the Wes Maas from 2002?
No, look, we grew with our clients, and our clients were Abbey Group, Thies, Leighton's, the tier ones, and we were building typical infrastructure projects like roads, dams, rail, etc.
And how far did the equipment travel? Was it mainly around the Dubbo region?
No, from 2007 to 2012, we were probably 90% external away from that Central West region. And many of our clients grew with that infrastructure boom and grew into Queensland and built some of the large-scale gas projects and coal mines and the like. And we grew with our clients. So in that 5-year period, I think if you look at history, your Abbey Groups, Thies, Leighton's, they all grew substantially, and we grew with them.
So the geographical spread started?
The geographical spread started, yes. We were from the bottom of New South Wales all the way to the top of Queensland.
So I did mention in the introduction a quarry that sits just near where your head office is now, which if anyone goes to Dubbo, it's in a strange place. It's just outside of town, but there's a quarry out the back with a piece of land there. Was I correct in saying that you were a bit fortuitous in landing that quarry? And if so, did that change the business slightly because all of a sudden you're into building materials? Is that a fair comment, or was you had that in your mind and you're already on your way?
Look at that next phase, so the 2007 to 2012, we grew from 40 machines to 400 machines. From 2012 to 2014, we remained at around that 400 machines. 2014, we could see that those huge mega projects, multi-billion-dollar projects, were probably going to come off a little bit. So we decided to diversify, and our initial reason, to sell down some equipment and build some more local business. So that was a quarry business, a property business, and an underground business, was to bring all our loyal people and look after them. They'd really looked after us for the previous decade, so we wanted to bring them home. And we actually had a quarry on the north side of Dubbo initially. Sorry, on the south side of Dubbo initially, and then we always knew of a property on the other side of town where we are today. And Wholesome had that under option.
How long had they owned it for?
I think they'd had it under option for about 5 years, and they are the operator of the quarry right next door. And when they merged with Lafarge, they let that option lapse, and the old farmer out there gave me a call, and I think I bought it the next day.
So that was obviously in your mind in that planning, that if we could get these type of assets, it would propel the business forward. Yeah,
for sure. At that point in 2014, as I said, we were looking to look after our good, loyal people. And when we first started the quarry business, we were hoping to sell 20,000 tonne per annum, and we were hoping to sell 20 blocks of land. And in our underground business, it was turned over $6.5 million. Now we ran at a steady state for about 6 months, and then over the next 5 years, each of those businesses grew 10 times. We weren't one to sit on our hands. We couldn't stand sitting still. So I think that was sort of the next phase, was that next 5 years of growth.
So there was a degree of integration there, so the listeners understand. So all of a sudden you're in building materials, but you're actually developing properties. You're doing certain civil work. So you're integrating your business through the chain. Is that a fair comment?
Yeah, correct.
And why do that? Why is that important? Did you just want to control the process, or you saw margins you can control if you're involved in more parts of the process?
Yeah, definitely margin capture, and we understood the correlation between each of those segments. So in 2020, when we listed, it's very interesting. The business was 31% internal generated revenue. So it was quite a vertically integrated business, where if you fast forward to today, 4.5 years later, it's only about 4%. So it's not that we're not a vertically integrated business today, it's just that the business has grown substantially externally.
And so that, just going back to that Wholesome, was that a mistake by them? Were they upset what the farmer did? You can be honest.
I would say
it's a few years ago now.
I would say it's definitely a mistake. I don't know if they're upset with the farmer, but I think that just large multinational businesses become cumbersome and slow, and they weren't able to act.
And why would the farmer call you? Old family friend?
No.
Local knowledge?
Local knowledge, and knew that we were on a growth path.
And so that period where you said those businesses grew tenfold, and you did more than reward your existing guys and just pivot the business, it was a growth story again. How many people were you employing by the time you approached that period where you're going to list in 2020?
I think at the point of listing, I think we were about 800, 600 to 800, in that sort of range.
And how many would have come out of Dubbo?
At that point in time, the business was maybe 30 to 40% in that western region, maybe a touch more. And today it would be well less than 20% of the total business. But
very important to the local area.
Yeah, very important to the local area. The local area has been very good to us. So I think it's a land of opportunity. The opportunity is there, it's just if you want to take it.
So you go into 2020, you look to float on the share market. Not sure why you would want to do that. You can explain that to us. It's a tough gig. And of course, we run into the COVID crisis, which I think delayed the plans in the first instance. Do you want to describe that environment? What led to wanting to list on the ASX, and how hard it was that year?
Our reason for listing was we wanted to continue to grow, and we wanted to grow faster than what we otherwise could in our own means. At that point in time, we were a large single-owned business. we're probably testing our bank relationships and the bank's appetite to continue to expand.
You're still with CBA at this stage?
Still with CBA, and shared a little bit with Westpac. So we did have two banks.
Are you still talking to the guys at Dubbo, or has it gone to head office
it had
now?
gone to a regional level, not to really a state level. We also had a number of key people that we wanted to align and share with the business. So we looked at our options, and our options was, to do a trade sale in partnership, or so work with private equity or list. And ultimately, options 1 and 2, their exit plan would be to list, and list was the biggest opportunity to align with all my objectives. So we decided to go down the listing path, and I think the listing path took 18 months to prep the company to be a corporate entity that was ready to be listed. So a lot of people said once we listed, what's it like being listed? And I said, well, it's just normal now because we already did that work for the last 18 months. As far as what happened, we launched the IPO process, I think, in February 2020.
Good timing.
And we actually had a launch dinner in Dubbo, I think on the 27th or 28th of February 2020, and I think within 2 weeks we were all sent home and wondered how the world was going to work. So that was very mentally tough.
And what actually happened in that period? I know from my point of view, running a funds management business, if you gave me the playbook before it and told me what would happen, I still wouldn't have known how we would have made money. Was it a surprise how it worked out? Because construction, if you were in the middle of Sydney, was one thing that kept going the whole way through, and so on. So civil works and different types of work, outdoor stuff, it actually turned into a benefit for you?
I think we were extremely lucky as an industry, and we weren't inhibited really at all, apart from that first 2 to 4 weeks where we all were sitting at home wondering how the world was going to work. But once we worked out life would go on and we could still operate, we were relatively untouched or unaffected. And I think there was some benefit that came out of that is what we had told the funds and the market during that IPO launch, and then what happened subsequently over the next 6 months. We did exactly what we said we were going to do. So we got some following from that and some credibility, and we were successful in getting the IPO away in December 2020.
Just before Christmas. And so you said to the faithful, the employees, that nothing changes, we work for 18 months. So you list, everyone watches the share price. It was quite a successful float and did well, and the next year was a good year. But through all cycles, and you've had a bit of experience now, has anything changed for you, the fact that you've got all these different owners on the register as shareholders?
I don't think anything's changed for me. I think over those phases of the business, I think that phase from 2014 to 19 was where we jumped on the forever phase, because we had 6 months of sitting on our hands, being in a quite steady state, and that wasn't for us. So I think that's probably where we really adopted "you're growing or you're dying" the philosophy, and we're on a journey. We enjoy the thrill of the game, and we try and make it a game. Everything we do.
But yeah, I have heard you say talking to people like me eats up a lot of your time. So managing your time and where your efforts put in does change if you're listed? Yeah,
it does. I mean, over the last 4.5 years, the amount of time that it takes up has changed a little bit. We've brought on a bloke by the name of Tim Smart to help out in investor relations and strategy, and that's given me back some of my time so I can work in the business or on the business. But I mean, you can't have all the pros without the cons. So whilst it can be quite frustrating sometimes, we also get the pros of being a listed entity.
Now, I put you on the spot here, but I remember interest rates went up in 2022. You've got a lot of exposure to cyclical businesses, property and equipment and so on, and that's a tougher period in terms of growing. And you also have to deal with the shareholders and so shareholders can be fickle or fleeting at time. I remember seeing you at a conference, and you got up. It was up in Queensland, a Morgan's conference, and your answers were very short, and you didn't seem like the happiest person in the room, which was strange to me because you were always fairly approachable, easy to deal with, willing to chat, which is not always the case with people who've built their own businesses. Was that a tough period, that 2022, both from a business point of view and how investors reacted? Because they'd start offering advice, no doubt.
Not from a business sense. So the business has always operated in a steady state. So, I like to believe that every business looks like its owner, and we've got a strong plan and unchanged. But quite frustrated probably with the market, and because the market can be so short-sighted. Whilst interest rates went up, if you look at long-term history, interest rates are probably only average. It's just, I suppose, the rate of change and how fast it changed in that period.
People don't like change.
It made markets be quite fleety and quite concerned about little things, where I think if that was quite frustrating for me.
Yeah, so that's always a challenge for anyone who goes from being private to public, is that they've got to deal with these various owners, as I said before. But in the long run, it works out. So that brings me back to, we're almost getting to today, and you'd said before that you like these mid or maybe even election length type plans where you break it down and attainable. The last 3 or 4 years has been quite interesting because you've expanded the business rapidly. It hasn't stopped you. You've recycled some assets, and now you've got assets, as I said in the intro, across all those states, and you bought a lot more quarries. And one of the key assets I see, you bought a lot of quarries in the Victorian area, which sets you up for the next couple of decades. So what's the vision there, and how are you thinking about it?
I noticed you said rapidly. I don't look at the business like we've grown it rapidly. I think we've grown it quite steady. So the business is now 22 years old, and by design, the business is a return on capital focused, and we recycle the capital and reinvest in asset-based or asset-backed type assets. So the business has grown roughly 30% compound annual growth, but that's by design. So we're only continuing to do the exact same thing. With the quarry assets, we've been quite successful in acquiring and growing our quarry business. So we've got an aggregate-led focus, and we've bought a lot of strategic long-life assets. Our average asset life is over 45 years. So
that'll almost get you to 90.
Yeah, it'll be maybe someone else's challenge towards the back end of that. But we're quite bullish on our opportunity to continue to grow that construction materials segment of ours.
So if I'm standing at the footy and I'm talking to the financial planner, again, I can't remember the gentleman's name that you mentioned earlier, what would the 5-year plan look like now in the broad brush terms? Is it to continue that 30% growth, or now that you're a bigger business that you've got to rein that in a bit and it's got to be a bit more controlled?
No, I think we can continue to grow over the next 3 to 5 years. We're quite infant in each of our segments, so we quite uninhibited for our ability to grow and grow at similar or the same rates. So I like to always say that the past is only a picture of the future. If we don't change our strategy, we'll just continue doing what we've done in the past.
Okay, so we're going to grow quite rapidly, and over a 5-year period, the business might be double the size that it is today. Does that require you to grow organically, acquisitions? Are you comfortable on the different ways of growing?
Yeah, typically we've grown roughly 50% organically and 50% through acquisition. And as I said before, we're buying assets or asset-backed type businesses, and assets that we think we can improve with our systems, process and culture.
And what if something doesn't work? Are you happy to say that we've tried our best there, dispose of it or shut it down?
If something doesn't work, we obviously have to work harder to either get it right or cut it. Yeah, for sure. And
so there's a mentality around what assets you own. They've got to be performing at all times.
Yeah, we've got a mentality across our whole leadership team, because we've got great alignment through our long-term incentive share-based programs that it's not just me calling out the business or calling out the underperformers. It's the whole team. So we have nearly 80 people in that top team now, and that's probably one of the things I'm most excited about is the maturity of the team and where the team is at, where the accountability that everyone takes on each business and its performance.
Effectively, you've had to learn on the job. You didn't spend a time in a corporate. I know you had some football experience, some good leaders, but to run a sizable business, you've had to learn as you go. Is that difficult for you? With people spread across the country?
Look, I mean, it's a challenge and it's an opportunity. I think we've been highly successful in attracting very good people. And we've got some great leaders in our business.
What do they like?
And there's a high degree of trust. I think we've been highly successful because of our people.
But what do you sell to them? What do they like about Maas Group?
We're always growing. We have a clear plan and we share. So I think that's the key to our success. Is we all go through a leadership program at Maas, and we all have the 1-2 thinking. So we think about the company and the village. If the village is successful, everyone within the village is successful. Just
going back to your 5-year plan, there's a lot of change going on in Australia. We've got energy transition going on. The landscape's changing a lot. We've had a lot of infrastructure spend, which you talked about a bit before. What's your how do you see the vision for, not for Australia, but your assets within that? What excites you? What areas has got a lot of runway for you?
Look, I've been consistent in saying that our construction materials business is extremely exciting. Where we are in comparison to our peers or our bigger peers, so you global majors of Holcim, Hanson, Adbrice, ARH, and Boral, we're minute in size compared to those, and our ability to continue to grow at the rates we are and have, I think that's quite exciting.
So as a challenger, you want to become a player in that league and be equal competitors, or is that too ambitious?
Look, I mean, I think we're always saying if we're not winning, if we're not first in the game, we're second, aspiring to be first. So I think it would be a poor way to think if you weren't thinking like that.
Because it's interesting from an investor's point of view. We've had a lot of corporate activity in the building materials business. We've seen Boral go into Seven Group, and we've seen CSR go and Adelaide Brighton to foreigners. So it's quite an interesting. Maas Group kind of sits as one of the few exposures for investors. So it's an interesting time for investors and the company.
Yeah, it's definitely. We've had a bit more interest from the market because there's not many ways the market can play construction materials in the Australian space today.
And it leaves you in not a bad position in terms of if you do need capital for that growth you're talking about at some stage, then it's not as competitive a field for that industry. So it's quite interesting. So what if we turn to Wes Maas? You get over your shoulder injury, took you 18 months, and you said it was quite mentally fatiguing, but you obviously bounced back quite well there. So we sit here today, you're 20-odd years, at times you've been burnt out. What's the picture look like for you? Because it's a totally different landscape. It's more strategic. It's more people management. How do you see your own career unfolding over the next, say, 20-odd years?
Look, I love what I'm doing. I love our team. So whatever I have a strong team and we're growing and success. So success for me is hitting our goals. Nothing will change for me. I'm in the game forever. I'm very comfortable in the role I'm in now, and I've got a great team, so that gives me confidence to continue.
And you just keep developing that leadership team to support that as you get bigger, as you fill in each 5-year plan? Yeah,
correct. We do a lot of work in our business on our team and the culture of the business and enhancing our skills. We catch up quarterly and we review the business and how we've performed in the past and where we're going in the future. And then we also have a social connection with that leadership team. So, we talk about sporting sporting analogies and about you growing or you dying, and I think it's exciting.
Well, it's been a terrific journey. I'm glad you did get over the shoulder injury, and it feels like you might have gone past Les Davidson. He might have been slightly better footballer at the time, but obviously you've done terrifically well in the chosen field. So we thank you for coming in, and we wish you all the best for the next however many years it keeps going.
Thank you very much.